Y'all, we got some fancy intro slides. We are classing it up this time on Power in Numbers Live. For those of you joining me, hello, say hello in the chat. If you are watching this on replay, still say hello in the chat. Let me know that you're here and watching this on replay. This is live right now, both on YouTube and also live over on Facebook. So wherever you're joining me from, tell me in the comments. I see some people joining now, which is amazing. And this is my monthly live show. So we started doing this in, I believe, August was our first show. And this was a way for me to be able to talk directly to all of y'all and also talk about things that are more topical. So we do news, to-dos, and cues, because, you know, who doesn't love a good theme, on Power in Numbers Live every single month. And so we have lots of news to get to today. So I'm going to get to that in just a minute. We're going to talk about things like BOI, which is the beneficial ownership form, which some of you have heard about. It's basically the information you're supposed to give to FinCEN, which is the Financial Crimes Network of the federal government. And there have been some changes. So some of y'all have heard about this. Some of you have no idea what I'm talking about. So stick around. We're also going to talk about some employee retention tax credit updates, including some of the fraud investigations that are going on right now, actually, coincidentally, by FinCEN. And we're going to talk about a new pick to run the IRS. So this is a new pick by Trump that would potentially be in charge of the IRS if confirmed. I have some thoughts, so stick around for that. And we're going to talk about some changes to 1099-Ks. Those are the things that are sent out by the payment processors like Stripe or Venmo or PayPal. There are some changes on thresholds this year you're going to want to know about. So lots in the news section today. So make sure to stick around. But before we get to all of that, y'all may have noticed we have a brand new sponsor today. So we have FreshBooks, as you can see, is our sponsor for today's live. So we're really excited to have them. If you don't know what FreshBooks is, I've been talking about them recently. I've been getting a lot of questions about accounting softwares. This is switching season, y'all. So if you've not been happy with the accounting software you're using, or maybe you haven't been using a software, but you think you're ready to do that, then I really recommend FreshBooks to you, especially if you are a solopreneur. If you are a service provider, right, and you don't need all the bells and whistles for inventory tracking and all that kind of stuff, you just want something that is simple, easy to use, and cost effective, FreshBooks is amazing. So definitely check that out. We also have some specific negotiated deals with FreshBooks as one of their partners. So I'm going to have my team drop that link down below. I won't tell you what they are. You got to go to the page to go check out our exclusive deals with FreshBooks. But you're going to go to jamietrull.com/FreshBooks deal. Okay, that's where you're going to find the most recent deals for FreshBooks that are exclusive to us. They're better than what you can find on their webpage directly. So always use our affiliate links whenever you can, because it's going to be good for you. It's going to be good for FreshBooks, and it's going to be good for us. So it's a win-win-win. Okay. All right. I see Angela from California. Hi, Angela. I see Jamie from New Orleans. I love it. I love seeing where everybody is from. I was just in California a week and a half ago in wine country, which is one of my absolute favorite places to go. And my wine just arrived that I ordered. So perfect in time. That was my holiday gift to myself. Okay. So let's get into it because we have so much, but y'all hang on. I have some exciting new transition slides because why not? I mean, how fun is that? Did I spend my morning working on transition slides instead of doing actual work that I need to do? Yes, I did. This is my kid's last day of school, full day of school for the year. And I have so many things I need to get done today, but instead I spent time making fun little transition slides for Power in Numbers Live. So if you are in procrastination mode, you're not the only one, my friends. Okay. So let's talk about BOI. So if you were on my live last month for Power in Numbers, we talked about BOI. I actually walked you through how to fill it out. It's really just a form that is asking you information about your ownership structure and whoever the beneficial ownerships are of any companies you have. So these are LLCs, registered companies with your state. You would need to provide that information. Now, that was the previous rule. People had feelings about it. The real reason for this, and a lot of people were asking, like, why are they asking for this information? Don't they already have this, right? Because a lot of it is similar to what you file with your state. But these agencies don't really talk to each other. So, they don't really pass information along in that way. So this was specifically for information related to financial crimes. Essentially, they want to know who the beneficial owners are of these different companies, because there's a lot of usage, especially these days, of shell companies, right? These shell companies that have kind of, murky ownership and murky, maybe they're owned by a company, but who is the actual beneficial owner? Who is the human being that is benefiting from this? That's what they want to know, right? Because when they're doing investigations, we're going to talk about a few that they're doing now, where I can see maybe where some of these rules came from, right? They want to be able to trace that and understand who owns what. And honestly, like, I can understand that being the case. I have tried to do research on various different entities before, and sometimes it can be a web of trying to figure out, who's really behind some of these kind of more shell companies. So when we get to employee retention tax credits, we'll talk a little bit about that, because this came up quite a bit. So there we go. We got probably fraud, y'all. Probably fraud is calling me, so that's fun. I also just bought myself an Apple Watch for Christmas, so I'm just buying myself presents at this point. But I love when it just tells me it's probably fraud. Okay, speaking of fraud, so for this BOI rule, it was going to be in effect. You had to file this by January 1st if you were an existing business, right? And new businesses would have a grace period, and then they would have to file as well. And this is something you were going to have to keep updated. If you moved or something like that, you had to go and update those addresses. And so it's just another thing for business owners to be worried about. And people really didn't want to give this information. They felt like it was maybe too much oversight. And it turns out a Texas court agreed, and they said that it's unconstitutional, and they have blocked it. If you're curious to hear why I think they blocked it, go back to last month's Power in Numbers Live, where I talked about the Chevron doctrine. I'm not going to nerd out on it again. I get a little nerdy when it comes to anything financial or legal. So the Chevron doctrine was just something that got overturned recently that I kind of expected to have a effect of deregulating things or making it harder for agencies to regulate. And I think that this is another one of those things. So last month we had the new overtime rules. The exemption threshold was being raised. That got overturned, right, by the courts. And then now we're seeing this getting overturned as well. And I think we could continue to see more and more of this. I think we're walking into an era of less regulation, which there are pros and cons to, depending on, who you are and, what you care about. So that's just something to know. So the courts have overturned it. Now, the federal government is appealing, right? So this is going to be an appeal. This already has been filed, and people are wondering, they're thinking, okay, maybe I need to go ahead and do this, because what if the appeal gets answered before the end of the year and then that January 1 comes back? Candidly, I don't see that happening. Typically, appeals take a while. Now, they may expedite this one. I don't know. But especially with a change in administration, I don't really see that happening. Appeals can take months or more, right? So more than likely, this is going to be stayed for a period of time. And my personal, again, if you don't want to worry about this and you want to take it off your plate, go ahead and file it. You can still file it. You don't have to, but you can. So if you're not worried about, giving your information, if you're like, hey, I'm not doing anything illegal, I don't really care, go ahead and fill it out. It'll take you 10 minutes. I walked through how to do it in last month's Power in Numbers Live, which my team can link down here below for you to go watch. But if you don't want to do it and you don't pay somebody to do this, that's the other thing I'll say, like, don't pay somebody to do this. This literally takes 10 minutes. If you pay somebody to do it, you're literally just they're going to ask you for the information, and they're literally just going to take that and put it on the form. Okay, so it's not like you're really even saving any time by having someone else do this for you. You're going to have to provide them all of that information. So literally, it's just adding a middleman, for extra cost for you. So it's a 10-minute exercise. Go watch the video. You can do it yourself. If you don't want to do it, don't do it, right? Stay up to date. Make sure you're watching for any updates. Again, I am of the persuasion that this is probably either going to go away or become voluntary. I could be wrong though. This is not, hashtag, not a lawyer. I don't know, and not a fortune teller. So, we'll see. But my inclination depends on your risk assessment, right? Are you a person that is like, you know what, I'm going to take my chances and I'm going to wait, and I'm going to pay attention to any developments? Or are you a person that's like, you know what, I'd rather just get it done and not worry about it? You make that decision. Personally, I have not filed yet. I kind of expected this to happen, so I waited on it. Even whilst reminding you of the requirement, I hadn't done it yet. So I'm probably going to wait and just see what happens. I'm not doing anything illegal, but again, why do something if you don't have to do it? Okay, so that's BOI. So that's just something to be aware of. Now, speaking of FinCEN, again, this is the financial, let me see if I can remember, financial enforcement crime, I don't know, something, hang on, let me tell you what FinCEN stands for, in case you're curious. What does FinCEN stand for? Hang on. Financial Crimes Enforcement Network. Okay, so that's where I get confused because it's FinCEN, right? So it makes you think the second word is an I, but it's not. It's FinCEN, Financial Crimes Enforcement Network. Okay. All right, good. I'm glad you like it. It's kind of just, choose your own adventure. You make your decision. You can go fill it out right now in 10 minutes and be done with it and not worried about it. Remember, for every entity that you have that's an LLC, right? So if you have multiple different entities, you got to fill this out for each of them. So go check that out. But speaking of the Financial Crimes Enforcement Network, which I had never heard about before BOI, but now has been coming up more, they are investigating, I think it's 323 right now, claims for employee retention tax credit, or they have initiated 323 investigations, not 323 claims, but 323 investigations. The total potential that they are investigating under these this 323 investigations is $2.8 billion worth of employee retention tax credit, which I did the math, comes out to about $8.7 million per investigation. So who are they investigating? Are these individuals that they're investigating? Maybe in some cases, but I think a lot of these investigations are actually these ERC mills, these employee retention tax credit mills that the IRS has been warning about for years now, that I've been warning about for years now, that we're essentially taking advantage of small business owners, charging high percentage credits, which is unethical according to, actual as a CPA, my ethics laws that I have to adhere to. I couldn't do something like this, but lots of companies got away with doing it. They also are, sometimes inflating the credit for that reason, right? Because if they tell you qualify for a higher credit, then they get more money. So there is a mismatch kind of in those incentives there. And so I think a lot of these investigations are actually in those companies, but that means it could have a knock-on effect on, totally, above board small business owners who were trying to do the right thing, right? And didn't realize they trusted a company that seemed legit. In some cases, there were even celebrities that were, advocating for some of these companies. And so there was an inherent amount of trust here, and there's tons and tons of fraud that has been going on. So they did, I'll have my team post. There is an alert that came out. I'm going to show you guys this really quickly. Present, share screen. So this is what they came out with. If you're curious about what red flags they're looking at, these are the things. So it's things like maybe a business account receives more than one ERC check. That could be a red flag, right? So they're looking at where are these payouts happening, and are they going to, one company? Did somebody make up a whole bunch of, companies, and then they're depositing them all into one bank account? Small business accounts receiving an ERC check deposit that is not commensurate with the size of the business, right? They have your tax returns. They know how big your business is. So if you are a business that made $100,000 last year in revenue and you're claiming a payroll tax refund of, $2 million, they're probably going to look at that a little bit suspect. Large ERC here, this is where you can find this. A large, let's see, where was it? A large ERC deposited into a business account and is subsequently transferred using a P2P, right, service, or to an online banking institution, or withdrawn as cash and ATM. So funds go in and funds immediately go out. That could be a red flag. The account receiving the ERC check deposit has no deposits other than Treasury issued checks, or the account has no regular business transactions, right? So if you opened an account, and this is something to note, if you open an account specifically for ERC, that's going to look suspect. So some people are getting challenged that maybe shouldn't, and it could be because they did something like this without realizing that it could be kind of a red flag. And maybe they just did that because they wanted to separate the money and they didn't want it commingled with all their other money, but the IRS may see that as a red flag and they may look further into it. So there's lots of these in here. Again, go check them out. I'm looking to see if there's any other notable ones. ERC check is deposited into a new business account that didn't exist. Again, same thing. If you opened a new account for this, that could, make you a red flag that you otherwise would not have been. Deposited into a business account with no payroll history. Again, a lot of this is looking at the accounts that the money is going to, right? And my belief, when I started to think about the beneficial ownership form and FinCEN, and now these investigations that they're doing, I think there's a link. And not that this is the only reason that FinCEN wants this information, but they likely are trying to figure out, okay, there are these ERC companies, and there's multiple different shell companies. You may have seen it, but they're using like the same websites and they have the same addresses, but it's really hard to figure out like who the owner of these companies is, right? It's like this crazy shell game. And so when they're trying to trace down like what actually happened here, they want to have this information. Now, you could argue like, are the people who are doing this, doing shady things, going to give them this information? The answer is probably not, but people are kind of dumb. So maybe, especially criminals, like they kind of don't always use their brains all the time. And so I think that there is part of what FinCEN is trying to get at that is to prevent things like this in the future where they don't know who to go after and it takes them an inordinate amount of time to figure out who the perpetrators are because of the way they've legally set everything up and the lack of transparency that the federal government has on that, right? So to be determined what's going to happen. But that kind of gave me a little bit of food for thought on like, oh, this is probably related, right? In some way. Okay, let's see, what else? There's also, they're saying there's about 22,000 improper claims, they believe, that they're looking into. So again, not all of those are probably improper, but maybe there was something that popped out on one of these red flags, or, potentially even just filing a form through someone, a company that is known to have, been an ERC mill would make your claim, even if it's completely above board and correct, subject to more scrutiny, right? If you worked with a local CPA, that is going to be less the case than if you worked with one of these big mills. Let's see, they've so far, 450 criminal cases have been filed already so far related to ERTC. I think there will be a lot more, although some of that's going to depend on my next question. All of my stories kind of link today. So what will happen, right? What will happen? So let's talk about the IRS. So we are going to now talk about the new nominee to be IRS commissioner. Okay. His name is Billy Long. He was he was nominated by Trump. Obviously, this has to go through the approval process, so we'll see what happens. He is a former auctioneer. He was in Congress for a while as well, but he didn't serve on the Ways and Means or anything like that has to do with money. He doesn't, to me, seem to have a lot of qualifications. And I think that there could be some interesting knock-on effects here. The qualifications that they point to say that he is qualified for this position. He's not a CPA, he's not an EA, he doesn't have a college degree. Not to say you have to have a college degree, but again, you're looking at, the leading the IRS, which has, I think, 80,000 employees, a multi-billion-dollar budget. You would want them to be qualified in some way. And I have some concerns, to put it mildly, about this person being in charge of all this, especially because they supported a bill when they were in Congress to abolish the IRS. And then they want to put somebody in charge of the IRS. Now, I'm not trying to get political here. I am simply looking at this person and what it could mean for the IRS and for us as taxpayers as well. And the biggest red flag that I have on this person, okay, is they have pointed to him having experience in tax law, or in taxes, and in helping people with their taxes and things like that, right? But again, I looked into this to see, like, hey, what did he do? He's not a CPA. How was he working with businesses on taxes? Well, he was promoting ERC. So he was, I don't know if he was processing them, but I know he was heavily promoting in the employee retention tax credit. And I heard him on some various different podcasts and things like that, basically telling small business owners that everybody qualifies. And that is a huge red flag to me. So again, I think they're putting him in charge of this, even though he was an ERC promoter. And so what's going to happen with these IRS audits if somebody who was a part of these, ERC potentially, part of promoting ERC, how are they going to look at it when they are in charge of the IRS? What happens to various different IRS investigations? Now, FinCEN is a separate entity, but again, the IRS is, also part of the audit process. And if they aren't interested in, really looking into this, what is that going to mean? So I thought that was just a really interesting person to put in charge of the IRS in general as an accountant. It's worrisome. Now, some people might like it because it's probably going to, again, lead towards, maybe less audits, maybe less audits of especially, higher income people, higher net worth people. But we'll see what ends up happening. I don't know. I can't tell you. Now, what I will say is, I'll show you really quick here. Add to stage, not this one. Hang on a second. So we will link if you're curious about this, there's an article linked down below that my team has linked. But this is what the article is. So here we go. So it talks about Trump's IRS pick, Billy Long. This is an Inc. article. Is sweet on the fraud-plagued employee retention tax credits. Some lawmakers think it's a bizarre choice. I probably put myself in that same category for this person. But again, I don't know them personally. So this is just hashtag, this is my personal opinion. The other thing I looked at, so it says he bills himself as what does he say? Certified tax and business advisor. And I'm like, what does that mean exactly? So I'm a certified public accountant. I have a, bachelor's degree and a master's degree. You had to have 150 credit hours in order to be able to even just sit for the CPA exam. Then you have to sit and pass an extremely difficult, rigorous exam that comes in 4 parts. Usually has to be taken over, call it like 18 months is what most people take it over. And then you have to have a couple of years of experience under a CPA in order to be a CPA yourself. You also have to have continuing education requirements every single year. Those are due. I have 120 credit hours every 2 years of continuing education that I have to do, including ethics education as well. So to be a CPA is an arduous process. Okay. So one would think that there would be similar qualifications for someone who I don't know is leading the IRS. But when I looked into his certification, he's a certified tax and business advisor from a company called Excel Empire. So he went to what looks to be maybe like a couple-day training, like a 3-day training to be called a certified tax and business advisor. And if you are curious, I looked this up. I'm like, I've never heard of this certification. What exactly is this? I'll show you. All right, here. I'm excited to get the hate on this video, but these are just my opinions. This is the website. This is the certification that our new potential IRS commissioner has from some random company called Excel Empire.
Hey, I'm Eric Couch, and I was just in the Bahamas with Excel Empire, and we completed our Certified Tax and Business Advisor designation. And let me tell you, it was incredible for a lot of reasons, right? I would tell you the biggest thing I got out of it, which the education was incredible. I learned so many tax benefits and ideas and details, but the reality is the community that I was surrounded by, that I'm going to continue to be surrounded by as we build and we grow and we work together, because everybody had a heart to just serve others, to build something together, to build something amazing. And I am so excited to be a part of this group that is growing so wildly fast. Ed Lyon is one of the most prolific tax attorneys in the nation. And the rest of the team is incredible. So I could not encourage you more to be a part of the CTBA designation and get on board now.
Convincing. Yeah, so that's the designation. I'm enjoying the Margaritaville cruise boat in the back. That actually would have been way more fun than, you know, the master's degree and CPA exam and all of that. Had I known this was a thing, I probably could have shortcut a lot of it and apparently qualified for a job much higher than the one that I currently hold. Anyway. Ooh, I like this. Let's have a talk about it. Okay, Henry says, I disagree. Whoever's leading the IRS or any other agency needs to know how to lead people into a certain direction. They do need to surround themselves with experts, though. I agree. I don't think that you have to have extensive experience. And I don't even necessarily believe that they need to be a CPA or an EA, but it is very difficult to lead people when those people are significantly more experienced in the details than you are, right? It's going to be hard. I have been in organizations like that where you have a leader who has significantly less knowledge and understanding of the underlying, you know, subject matter. And it doesn't make for an easy leading. You have to have a certain base understanding. So I do understand. I don't know anything about his leadership skills, but I'll say, again, I'm not attacking the qualifications necessarily, but I think the fact that ERC is where he hangs his hat as having, you know, what they're saying is he's got all this tax experience. Look, he helped people with ERC. This was an incredibly fraught program. And if you're going on podcasts telling, you know, essentially saying to small business owners, hey, you probably qualify, like, I get it. But it seems like, you know, there may have been, I'm curious to know, my curiosity would be like, how much did he make off of processing ERC claims or promoting ERC, things like that? I would have questions, ethical concerns. Again, there's no ethical requirements for something like this. So I get it. I agree. You don't have to have all the qualifications in the world, but I think there should be some level of base understanding of what you're doing, right? In order to be able to effectively lead. But I know that different people have different feelings about it. But that just gave me a little bit of the, like, my ears pricked up a little, just looking at like, this is what we're talking about. This is the experience that this person has. Okay. All right. I'm done. Feel free to give me your comments. I think we need to look at everyone that comes through with these and understand what are they likely going to bring to this job and what direction is it likely to go. This is a person who has essentially shown like they're not really into the IRS. They tried to abolish the IRS in the past. Maybe that brings a new perspective, or maybe it brings chaos. TBD. Okay. Let's talk about one more thing in news before we move on. We're going to talk about the news surrounding the 1099K threshold changes. I have a video coming out soon. So again, if you're watching on YouTube, make sure you subscribe so you get the video. But essentially the 1099K thresholds are changing. Oh, thanks. I'm just Maybe. I mean, there's probably somebody else, right? Like there's probably somebody else out there. Okay, so the thresholds are changing now. It used to be, so think about 1099s, right? When you're doing, if you're in a contractor and you're doing work for someone and they pay you in cash or, ACH transfer or whatever, if they pay you more than $600 in a year, you get a 1099, or you should get a 1099 from them for the services you provided. That is what you use to claim that income. But whether you get that 1099 or not, you need to claim the income, right? That's just the general rules. If they forget to send you the 1099, you're not off the hook. Now, 1099Ks have been a little different. Those are the 1099s that come from PayPal, Stripe, right? Venmo, any of those types of third-party payment processors, right? And the previously, the threshold for that was $20,000. So you were not going to get, if you didn't have $20,000 of payments total in the year going through Venmo, PayPal, Stripe, etc., you weren't going to get a 1099. Now you may. So now the threshold, they changed the threshold a couple of years ago to $600, but then there was so much uproar about it because that's a huge change, 20,000 to 600, right? That they decided to stair step it. So for transactions that occurred in 2024, the threshold is $5,000 from those payment processors. So still a lot of people that fell in that middle between 5,000 and 20,000 are now going to get 1099Ks. Next year, it's going to go down to $2,500. And then it's going to go down to that $600. So we're stair stepping it over time. Now, there's been a lot of hullabaloo about this because there's concern that like, oh, hey, I just am reimbursing my roommate for something on Venmo and now I'm going to get a 1099K. No, just make sure that you are denoting things as friends and family if they truly are and they aren't business transactions. Don't mark them as goods and services, right? If they are not actually goods and services transactions. And again, this is for business accounts as specifically, right? So this should not apply to personal accounts. And even if it does, the video that I'm putting out will kind of tell you what to do and how to handle it on your tax return if you get a 1099K that you don't think that you should have. So again, make sure to subscribe so you get that video, but just wanted to people to be aware of that. Okay, Becky says, I appreciate having a healthy discussion on opinions. The IRS as an organization is fraught with many of the problems and more transparency needs to be had. I don't disagree with that. I totally don't disagree with that. I think there are a lot of problems. I think customer service is a huge issue with the IRS. I think processes. I mean, like we are in the archaic times. I had to send in, I'm trying to remember exactly what it was. Oh, I just literally yesterday, there wasn't a portal. I had to give a notice to the IRS and I literally had to go find an envelope and a stamp. And I'm like, how is this efficient for literally anyone? What, like I could in a day whip up a landing page that could do this and could submit this information, but it's archaic. So there's a lot of work that needs to be done. So I do think, I don't disagree with an outsider being a good fit for this. I actually think that is a good idea. I just love for them to have slightly more qualifications potentially. Okay. And less red flags. Okay, here's the information on the new 1099K threshold for you. All right, I told y'all I had a lot of news today. So this was my news for this live. And now it's time to go to our next section, I think. Let me make sure that I've gotten to all the news. I think I have. Okay, great. So now we're going to go over to our to-do section. Y'all, I love that so much. It's way too much fun. Okay, so what do? Well, we can pause on BOI or you can go ahead and file it if you want to. But this to-do section is really going to be looking at where are we in the year and financially, what are the things we need to be focusing on now, right? So we are in the middle of December, the middle to end of December. We're at the end, y'all. Like this is it. So what do we need to be doing right now? I want to talk to you who are my cash basis taxpayers, which is probably most of you, right? Meaning you are going to recognize on your financial statements and on your taxes any money that came in, actual cash that came in during the year and actual cash that went out. So December 31st really matters for y'all. Meaning, if you've got outstanding invoices, right, that haven't been paid, those are not going to count as income, as revenue to you for this tax year unless you collect on them. Now, that may be good or bad, right? Same thing as expenses. If you are spending money this year, more than likely, now there are some exceptions if you're buying assets, various different things, but more than likely, if you are spending money this year, it's going to be an expense that you will deduct this year, okay? So that means in the next, call it, really like 10 days, okay? Because the bank, like you want to think about the fact, I think New Year's Eve is on a Tuesday. So really I am targeting next Friday, the 27th. That's my date to make sure I've done all the things that I need to do with my money, right? Because it takes a couple days and, all of that. So think about, do you want to collect on outstanding invoices? Are there things out there? Do you want to bring that revenue into this year? Do you want to spend more money this year? Maybe you have a big tax bill that you didn't expect coming up, so you'd rather move some expenses forward. So it may be things like, okay, I pay for a monthly software. I can upgrade to the annual and pay all that this year to get that tax deduction. Now, whether that's good or bad for you depends on your overall tax picture. So don't make decisions just based on what's best for 2024. Think about next year and going forward, right? So again, always think about the big picture. If you expect your tax rate, to go down next year because maybe this year you just had a whole bunch of income, there was some extra things that happened that you don't expect to repeat, then it probably makes sense for you to move some of that income, if you can, to next year, right? By not collecting on it, or move some expenses forward to this year to reduce this year's income. If you expect next year's taxes to be higher, however, right, which typically as our business grows, our tax rate's going to grow, then you might want to do the opposite and actually delay expenses to next year and, pull forward revenue to this year. So really be thinking about that. Also making contributions to your retirement accounts. You typically have until you file your taxes to actually make those contributions, but you do need to have the account set up by the end of the year to do so. So just thinking about that, charitable contributions, again, depending on which year they are in, that's when you claim them. So this is the time to get strategic. Pretty much no other time of the year does timing matter for a small business from a tax perspective, except what happens now, right? This timing between these 2 years. So if that's not something that you normally do, I would sit down and get a little strategic, think about what makes the most sense for you. I'd say reach out to a tax advisor, but more than likely they're going on Christmas break at this point. So it's probably going to be you trying to make some of these last minute decisions at this point. Next year, it might be good to sit down with a tax advisor. It's round about October to talk about your options. But now you're going to have to kind of make some of those calls. The other thing I like to do at the end of the year, and again, this will be next Friday for me, I'm going to be transferring the money where I want it to be. Meaning I have, various different credit cards that I use for business. I have, my regular bank account. I have a PayPal account that money sits in until I take it out. I like to make my life easier or my bookkeeper's life easier, right? For when those accounts are being reconciled. Personally, I pay my credit card bills before the end of the year. Again, I'll do it on the 27th because I want to make sure that it goes through by the 31st. So I'll pay those down so that my credit card bills will be at or near zero. So it makes for a much easier reconciliation process. I'll take the money out of PayPal, again, to have a at or near zero balance in PayPal at the end of the year. Just think about how you can help future you not have to reconcile all these transactions going every which way. It definitely makes life easier when you kind of streamline a little bit. You don't have to do this. This is not a must. It's just kind of one of those things that I've gotten to do into the habit of doing that I always thank myself for when I get into doing all my reconciliations and things like that. Also make sure that you have things like, W-9s. If you hired contractors this year and you paid them via cash or ACH, right? Make sure that you have W-9s on file so that you can send them those 1099s, because that 1099 deadline is coming up quick in January. It's at the end of January. So I'll talk about it in my live next month, but at that point, you're not going to have a ton of time to gather things together. So go ahead and do that now. okay? Because it can take a while to chase these things down, get the information that you need, and you want to stay compliant. Okay, so that's really kind of the to-dos. I'll also talk about if you're thinking about switching different systems, and I'll have my team look for this. I didn't put this video on our outline team, sorry, but we do have a video out there about kind of switching systems at the end of the year, what new systems you might want. So this is a good time to be looking at both, banking systems. This is a good time to be looking at payroll systems and accounting systems. I just find you can switch all of those anytime you want, but I love, this is the CPA in me, I love a good January 1st clean break. So this is a great time to be looking at what other solutions you want to use in 2025. What's worked for you, what hasn't. We have tons of different recommendations for you. One of them being, sorry, this is the mirroring. I always think this is the way to point, this being FreshBooks. So you can go check that out. Again, you can go to our various different landing pages that we have. jamietrull.com/accounting is going to show you our recommended accounting platforms and the deals you can get with them. jamietrull.com/banking is going to show you our banking recommendations and special deals with them. And jamietrull.com/payroll is going to show you our payroll companies. And we have multiple different companies that we partner with depending on what's best for you. So here's that video on the 3 financial systems you might want to put in place. This is just a really good time of the year to be thinking about that. And I love like that time between Christmas and New Year's is real quiet. I'm kind of in and out of the office, but I'm thinking about those types of things, systems, process improvements. How can we make life better? What are your business resolutions for 2025, right? What do you want to improve on specifically from a financial perspective? All right. Okay. So let's go and jump over to the next section. All right. Now it's time to take your questions. So I'm happy if you drop some questions in the comments if you're here live, but I'm also going to go look at a few questions that were submitted. So there is a way to submit this, depending on if you're watching on Facebook or YouTube. My team will link how to submit questions for the next Power in Numbers Live. And we pick from some of those, that people submit so that we can talk a little bit more about them. So the first question is from, let's see, Christine had a question. I'm going to put that up onto the screen for you. And Christine says, I've invested in some online courses to help speed up the learning and wondering if these purchases can be used as deductions when filing taxes. If so, what category are they listed as? Yes, this is one of the beautiful things of having a business. That yes, for your business, if you're using it for business purposes, right, then those are almost definitely going to be deductible for tax perspective. It's going to be typically under education, right? So if you're going to conferences, if you're doing digital programs, if anything like that you're doing can be deducted. Now, there are some rules. If you haven't started making revenue yet, then it gets a little bit tougher to deduct these things. So I typically tell people it's a good idea to make a little bit of money so that you can say, yes, I have a functioning business. Otherwise, you might fall into these startup costs, there are different rules around startup costs and what you can do there. But generally, more than likely, if you have a functioning business, you can deduct all of that as education. And just document it as such, right? So that's the key with any deduction you're taking, document the why. You don't want to just, the receipt's great and all, but what did you do with it? How is this something that is helpful for your business? And the words are typically for deduction, it's ordinary and necessary. So education, those types of things are generally very ordinary in business. Necessary also means, based on the IRS definition, it doesn't mean you have to have it. It just means it's a normal thing that other people in your industry do, right? So it doesn't mean you have to have this education to do your job. It just means, that it's a normal type of thing that people in your business type would do. And there's a direct relationship, right? Okay. Here's where you can join our newsletter and submit your questions. So if you're watching on Facebook, this is the link you want to use. jamietrull.com/newsletter. If you're watching on YouTube, go to jamietrull.com/YouTube. Once you join our newsletter, you'll be given the option to be able to submit your questions. And even if you're already on our newsletter, you can go ahead and do this. It's not going to put you on there twice, I don't think. Okay. Let's see. So the other big question that has come up a lot, and I think because this is switching season, is related to Facebook. Something that has come up a lot in Facebook is related to accounting software. So I'll show you a couple of questions that have come up on Facebook. We've had similar questions actually on YouTube as well. I just picked a couple of them just to kind of show you the theme of what we're seeing a lot of. So these are some of the comments that have come into our Facebook group. But essentially, one person just says, I'm done with QuickBooks. I'm tired of using a software that doesn't work and charges an arm and a leg. I'm needing simple expense tracking with categories that will categorize and not break the bank for my solo salon. Okay, I'm looking for real life application. Great. Then we had another person trying to find an alternative. This keeps coming up over and over and over again. What else is there? Now, y'all know I've talked about QuickBooks. I'm a QuickBooks user, but I don't think that it is the best solution for everyone. I'm an accountant, right? So it might make sense for me. There's a lot of accounting tools. That's great. I actually think that some of these other solutions, and I did a video recently about alternatives to QuickBooks. I spent months researching and talking to these companies and playing with these, demoing their products to try to understand what's best. So I'm going to show you a video where you can go in if you want to see inside each of these different, here you go, platforms to see what they're really best for. Then definitely go to the top alternatives to QuickBooks Online. But also, because we do have FreshBooks as our sponsor, I want to highlight them here really specifically because one of you said you were a solo salon and you're like, I don't need all this other stuff. You are a perfect fit for something like FreshBooks. It can do all the things. It's meant for service providers just like you, okay? Everything within FreshBooks is really catered towards solo service providers, not even necessarily solo. You can have employees as well, but it's really meant for, it's built for service providers. Invoicing, all the different things that you need, project profitability and things like that are all within there. Quotes, things like that that you want to be able to do, you can handle through FreshBooks, and it's really built with you in mind without all of these bells and whistles that some of the other accounting softwares come with. So I just wanted to kind of highlight that fact and let y'all know to go check out FreshBooks. And again, we have a special FreshBooks deal. So jamietrull.com/FreshBooks deal is where you're going to find our special negotiated deal with them. And it's a good one. It's a good one. And I don't know how long it's going to last. So go check it out right now and see what it is. But it's a really great deal. And again, this is a great time to be thinking about switching. If you don't need all the things, FreshBooks is a fabulous option, and it is more cost effective than something like QuickBooks Online. Okay, awesome. Oh, and I wanted to say too, my favorite thing about FreshBooks is it can grow with you from the standpoint of a lot of the other entities or a lot of the other accounting softwares, the way they work and the way their pricing works is that it's about features, right? So if you need project profitability tracking in QuickBooks, you got to go for Plus. But in FreshBooks, it's more on volume. So it's more about how many clients you need it for, not the actual, different thing that you need, right? So that means that even in the lowest level, you get access to things like that in FreshBooks. And then as you have more clients and need more volume, that's when your price increases and you go to the next levels. So I kind of like that for those of you, especially for if you're just starting out and you don't need a lot. It's a really cost-effective way to get started. Let's see. I'll have to check and see. With like the specifics on how it allows you to do it from a register view. I will say FreshBooks has changed a lot. So I looked at it years ago and I did not like it because it wasn't double entry accounting. They changed that. So they've added a lot of new features, and they're constantly rolling out new features. So that is one of the things that I love about it is they're really keeping pace with what people are asking for. All right. All right, everybody. Well, thank you so much for joining me here today. I appreciate y'all so much. If you're watching on replay, make sure to tell me you were here. I want to hear from you as well. Ask your questions. Give us your comments. If you've got thoughts, we want to hear them down below. I'm going to be monitoring these comment threads and responding where I can. And have a fabulous, fabulous holiday season. I will see y'all again in January. Bye for now.